are going to go live to business reporter Ed Boyd to talk about this interest rate cut. It's at the RBA. Ed, what's the reaction been this afternoon?
Well, it's been a widely expected decision this afternoon, Annalise, with the Reserve Bank cutting interest rates by 25 basis points today to 0.5%. And joining me now live is Shane Oliver from AMP Capital. Shane, what's your reaction to today's decision from the Reserve Bank?
No surprise. I think the Reserve Bank has done precisely the right thing. To have delayed a month or so would have just, I think, further harmed the economy. So no real surprise. I think after the Fed moved or indicated on Saturday morning our time that they were most likely going to move to a rate cut in a couple of weeks' time, the RBA really had no choice.
Westpac have already announced that they will pass on the full 25 basis points to their customers. Do you think the other three of the big four banks will now follow suit?
They're certainly going to be under a lot of pressure, and it's interesting to note that the first two cuts were largely passed on in full. The last cut back in October was only about 0.14 of the 0.25 was passed on. Now I think Westpac has thrown down the gauntlet here. That's going to put a lot of pressure on the other banks, so I think there's a good chance the other banks will pass a big chunk of it on, if not the full amount, at least 0.2%.
The Reserve Bank Governor Philip Lowe in his statement talked extensively about the coronavirus hurting Australian economic growth, and an economist this morning, Warwick McKibben, predicts that it may reduce Australian growth by 8%. What's your reaction to the virus and the impact it'll have on Australia?
It's certainly going to be a big negative, and don't forget the December quarter numbers which come out tomorrow might even show Australia stalling in the December quarter. There is a risk we could have already gone backwards in the December quarter. So that's before the bushfires intensified and the coronavirus hit the economy. So now we are looking at a negative hit to growth in the March quarter. I don't think it will be as bad as 8%, but it will take the economy backwards. The real risk is what happens in the June quarter. Go back a month or so ago, there was some confidence that this coronavirus outbreak would be short-lived, only have a temporary impact or short-lived impact on the economy. Since then it's gone global, and so the threat to Australian economic growth, the threat to the June quarter as well as the March quarter has increased.
And what are the implications for the federal budget? Will we still expect to see a surplus this year?
I think it's very unlikely we're going to see a surplus. The numbers which we've seen coming in so far have been running below what the MyEFO indicated would be the case, so it's already running below projections, and that's before, of course, the slowdown in the economy that we've started to see now. So I think we'll struggle to see a surplus this financial year, and next financial year we really need to see some stimulus.
Is there time right now for the government to inject stimulus? Should they be putting a stimulus out into the market at the moment?
I think they should be. So far the government's approach has been mainly on targeted stimulus measures aimed at those sectors of the economy being affected. I think the problem is that the impact on the economy is going to be more than just an impact on tourism or higher education. It's going to be broad-based. You really need something that gets Australians spending again, feeling comfortable with themselves, getting businesses to invest again. That's what we really need. To do that, I think you need quite a significant fiscal stimulus, possibly of the order of $20 billion in the course of a year.
We've had one rate cut today. Are you predicting any more interest rate cuts later this year?
We do see another one. We see another cut next month, so taking us down to a record low of 0.25%. And indeed, the Reserve Bank left the door open to an easing, saying that they stand prepared to stimulate the economy further. So I think, yes, we will see more cuts from the Reserve Bank, or one more cut, and that will be required to help the economy.
The Governor has said once we get to 0.25% basis points, there will be no more cuts. What more can the Reserve Bank then do to stimulate the economy?
Yeah, I think 0.25 will be the floor, and we'll hit that level next month. We're currently at 0.5. What more can it do? It really goes down that arcane path of quantitative easing, which involves printing money, using that money to buy up assets like government bonds, and so injecting that cash into the economy. There is some evidence in the US and Europe, Japan, that it helps. Ideally, though, I think that needs to be timed and to occur in concert with fiscal stimulus. That would be the best way to get the maximum bang for the buck from quantitative easing.
And you mentioned the GDP. The numbers for the December quarter come out tomorrow. What sort of growth are you expecting?
Well, believe it or not, we're looking for no growth. The numbers out today in terms of public demand were weaker than expected. We also saw a weaker than expected contribution to growth from trade. So consequently, we've revised down from 0.3% growth for the December quarter to zero. which will see annual growth slip back to 1.6%. So the point about all that is that even before the coronavirus has hit the economy, that gentle turning point the Reserve Bank had been talking about seems to have been turned into a gentle turning point on the way down. So that is a bit of a concern that even before this, we were looking pretty weak.
And we've also seen the stock market rise a bit today. Do you think we're still going to see a lot more market volatility over the next couple of months?
I think we will. The bottom line is that the number of cases on a daily basis continues to mount internationally in terms of coronavirus. See, what you need to track is the number of new cases that are announced each day, and that's still rising. It's declining in China, which is a good sign, but it's rising outside of China. And until we can see some peaking in the number of new cases on a daily basis, then I think we're going to see more volatility in share markets. Stimulus measures like the Reserve Banks today will provide some help. But at the end of the day, we really need to see signs that this virus is coming under control globally, and at the moment we're still a fair way away from that.
Shane Oliver, thank you very much for joining us.
My pleasure, thank you.
Thank you. Back to you guys.